Hello and welcome to today's webinar on the construction industry scheme domestic reverse charge, theory, preparation and also the implementation in both Sage 50 Cloud accounts and Sage Business Cloud accounting. My name's Jackie and I will be taking you through today's training session. Let's take a look at today's agenda. So this webinar is split into two parts. Part one is going to be looking at those theory and preparation steps, with part two looking at the implementation. So in part one today, we'll be looking at an introduction and overview of domestic reverse charge. We'll also look at missing trader fraud and how to solve this. We'll look at steps to prepare for these changes coming into force, and also some of the other considerations. Under part two, we'll then look at how to process incoming supplier invoices, how to issue your customer invoices where domestic reverse charge applies. We're going to look at the impact on the VAT return. We'll also have a look at some of the common questions and also a look at the further support and help we have available for you. So due to some exciting recent updates to our Sage Business Cloud software, we will actually be demonstrating the processing of domestic reverse charge on two different products today. So please do be aware during the demonstrations that not all slides may be relevant to your situation. We have kept these as two separate sections for clarity. We have some clear objectives for today's session. So number one, you will understand the upcoming CIS domestic reverse charge legislation. Two, you will understand what you need to do as a business in order to process domestic reverse charge transactions. And finally, you'll understand the impact on future VAT returns. So now it's time to have a look at some of the theory behind domestic reverse charge. Before we begin, however, I will just highlight some of the terminology used today. Often this legislation is referred to as domestic reverse charge. It may also be referred to as reverse charge for CIS, and today you may also see it shortened to DRC. So let's take a look at some background first. So this was originally due to come in October 2019, and originally it was delayed to allow businesses more time to prepare. The COVID-19 pandemic further delayed this, and it's now due to come into effect on March the 1st, 2021. This new legislation will apply to most businesses involved in the construction services, and domestic reverse charge applies to both standard and reduced rate services. It's for businesses registered for VAT in the UK who are reported under the CIS scheme. So if you're not sure whether the services you supply are subject to the domestic reverse charge legislation, HMRC do have an extensive list on their website, the link for which is on the screen at the moment and will be found in your handout. So the domestic reverse charge changes the way that VAT will be processed within the construction industry. It has no impact whatsoever on the current CIS process of withholding tax for your subcontractors. It's an anti-fraud measure which is being introduced to prevent something called missing trader fraud, which we'll cover on the next slide. It's believed that this legislation could affect 150,000 businesses in the construction industry. And as you all know from other legislation changes, there will be penalties for non-compliance. Domestic reverse charge means there will be a liability transfer. So it's going to introduce notional VAT to contractors in the middle of the supply chain. That moves the liability away from them, transferring it up to the final contractor in the supply chain, who will then pay that to HMRC. So as we mentioned earlier, this new legislation is an anti-fraud measure. It removes the opportunity for fraudsters to charge VAT and then go missing before paying it over to HMRC. And this is what we're terming missing trader fraud. And this is where organised crime gangs will take over companies or create shell companies to steal VAT whilst operating alongside actual construction services. So let's take a look at how that works. So under normal circumstances, a subcontractor will invoice the main contractor adding on the 20% VAT. The main contractor will pay that invoice including VAT to the subcontractor. The main contractor can then reclaim the VAT from HMRC, and the key part being is the subcontractor then declares the VAT and pays it to HMRC. Under missing trader fraud, however, the same process occurs, so a subcontractor will invoice the main contractor, including the 20%. The main contractor will pay the invoice due again to the subcontractor. The main contractor will reclaim the VAT. However, the subcontractor will disappear without filing their tax returns and without paying any of the VAT to HMRC. So this next slide just explains missing trader fraud in a slightly different way for you. Here we have an invoice for £1,000 plus £200 VAT. And in this example, we aren't taking into account any CIS deductions. So the first step is the subcontractor will charge £1,200 on their invoice. The main contractor will then make that payment to the subcontractor. The main contractor then recovers the VAT as purchase tax from HMRC, and the subcontractor will pay the VAT due as a sales tax. So the overall effect at HMRC is zero. Finally, the subcontractor will bank the £1,000 net value. Under missing trader fraud, the first few steps are the same. So the subcontractor will still invoice the main contractor for the work completed. The main contractor will pay the subcontractor. They'll also recover the VAT as purchase tax on their VAT return. The subcontractor, however, has gone missing, leading to missing trader fraud, leaving HMRC down by £200 and leaving the subcontractor to bank the full value of the invoice. In our example, we've used typically low values. As you can imagine, in the construction industry, these values can be much higher. This is why HMRC are predicting this will cost up to 140 million in the year 2020-2021. So now let's take a look at the solution and how HMRC are intending to combat this missing trader fraud. So this is where HMRC are introducing domestic reverse charge. What this will do is it will transfer the liability from the suppliers at each level of the supply chain up to the final supplier, who will then pay the VAT. Domestic reverse charge technically applies to services, but if you have an invoice which contains both CIS and non-CIS items, then domestic reverse charge will still apply. The reverse charge will apply what we term notional VAT to the VAT return. So a notional VAT affects both sales and purchases. Therefore, there's no overall VAT due on the VAT return. As you can see in our example here, boxes 1 and 4 contain the same value, therefore cancelling one another out, leaving box 5 with no overall figure. This notional VAT allows HMRC to analyse the amount of VAT that would have applied if normal VAT rules applied. Now, our products will introduce features to automatically account for this for you, and we will demonstrate that later for you. So what do HMRC want to see occurring when processing domestic reverse charge transactions? So first of all, for your purchase invoices and purchase credits, they would use reverse charge and implement the notional VAT, so the net amount would show in box 7, and boxes 1 and 4 will hold that notional VAT amount. For your sales invoices and sales credits, reverse charge will only impact box 6 with the net amount only, so there's no notional VAT at this point. However, if you're issuing an invoice to your customer, the invoice must clearly state that the transaction is subject to reverse charge and either contain the value of that VAT or the percentage rate of that VAT. HMRC have provided examples of the wording which meets the legal requirements, and that is held on the link at the bottom of the page. Again, that link will be found in your handout. So reverse charge doesn't apply to supplies to end users or intermediary suppliers. They're considered the end of the chain and normal VAT rules must apply. Communication must be made and it must be in a written notification of end user or intermediary status. And this can be made in writing, via email or in a formal contract. This was previously considered desirable, but is now a requirement, and this came into effect in June 2020. So next we're going to take a look at how to actually apply domestic reverse charge. So this may appear to be nice and easy. Unfortunately, there is a little more to it than simply applying domestic reverse charge to every single transaction you process under CIS. You actually need to understand where you fit into the supply chain so you know that whether or not domestic reverse charge applies. If domestic reverse charge applies, then move the liability up to the next business in the chain where they will have to do the same assessments. So what you need to consider is the service being supplied subject to CIS? Is the supply subject to standard or reduced rate VAT? For suppliers, is the supplier VAT registered? Are your customers end users or are they providing onward supply of services? What is the tax point of the transaction? Does that fall before or after the legislation change? And also consider that only the end customer is going to be paying the VAT. Our next few slides should hopefully clarify this further for you. You may have already determined your position in the supply chain in each of your contracts. If not, you may need to contact your customers and suppliers to confirm details, such as if they're VAT registered, if they're within the construction industry scheme, and in the case of your customers, whether or not they're end users. Remember, if you are an end user or you're dealing with an end user, this needs to be confirmed in writing. To help us today, we are going to use this 5-step chain as an example, and we're going to look at the domestic reverse charge from a perspective of the 3 contractors in the middle of the chain. These will all need to deal with domestic reverse charge in different ways. In this example, our sole trader is at the bottom of the chain and they're not VAT registered, so domestic reverse charge does not apply to them. The end users or customers at the top of the ladder are the final link, and again, quite often these may be individuals or not VAT registered. To begin with, we're going to start with the small subcontractor who receive an invoice from the sole traders and send customer invoices onto the larger subcontractor. So what we will do is we will summarise the old process versus the new process under domestic reverse charge. As mentioned before, the sole trader that they're dealing with isn't VAT registered. Therefore, the purchase invoice they're receiving from them is treated in exactly the same way as it would be prior to the domestic reverse charge legislation coming into place. The change for the small subcontractor comes when they need to send a customer invoice to the larger subcontractor, the next one in the supply chain. So first, let's take a look at the old process. So under the old process, the small subcontractor would charge 20% VAT on their invoices that they're issuing to their larger subcontractor, and they should pay that VAT to HMRC. So in this example, you can see that they've charged £110 plus £22 VAT, and £22 is due to HMRC. Under domestic reverse charge, the customer invoice will need to show clearly that domestic reverse charge applies and show how much VAT would have been paid under normal circumstances, but it's not to be added to the total of the invoice. This means that the small subcontractor is no longer paying VAT to HMRC, they are transferring that liability on to their customer. In this case, that is the larger subcontractor. So next, let's take a look at the steps for the larger subcontractor in our example. These are those businesses in the middle of the chain who are affected by domestic reverse charge on both their customer and supplier invoices. This large subcontractor uses small subcontractors but is also subcontracted themselves. So when they receive their invoice from their subcontractor, they recover from the purchase invoice £22 of VAT. When they produce their sales invoice to their customer, they charge £120 plus £24 VAT. In this case, that means that overall they pay £2 of VAT to HMRC. Under the new process, they will record notional reverse charge based on the purchase invoice their subcontractor has issued them. As you can see here, that will impact both boxes 1 and 4 of the VAT return. On the sales invoice they are sending to their customer, they would charge the £120, but this time with reverse charge VAT, again indicating that reverse charge applies and not adding that to the total of the invoice. Again, passing on this liability to their customer. As you can see here, this means that there is no overall VAT due to HMRC. Finally, let's look at the steps for the main contractor. These are the businesses that are dealing with those end users and they have had either written confirmation of that or they are not CIS or VAT registered. So these businesses are still not the end of the chain as they use subcontractors, but they are in fact invoicing the end customer. So again, under the old process, they would recover the £24 VAT charged by the larger subcontractor, and on their invoice to their customer, they would invoice £130 plus £26 VAT. Again, this means that they would owe HMRC £2. Under the new process, they will record the notional reverse charge based on the VAT that their subcontractor has issued to them. As you can see again, that's going to affect box 1 and 4 of the VAT return. The difference, however, is that because they are dealing with an end user, normal VAT rules apply, and in this case they are actually charging the customer as normal, so for £130 plus £26 VAT. This means because they are the final link in the chain for domestic reverse charge, they are then paying the entire liability to HMRC. This final slide here is a really good visual representation of the old process versus the new process once domestic reverse charge applies. You may find it useful to maybe take a printout of this to help you through those early days understanding the impact on the supply chain. There are some more considerations to take into account prior to this legislation coming into effect. These may have wider impacts to your business, so it is worthwhile considering these in advance. So the first is that of cash flow, and to demonstrate this I have used our small subcontractor from our example, but this may impact any business no longer physically collecting VAT. This legislation could potentially impact the cash flow to your business, particularly where you would collect VAT on invoices and in some circumstances potentially not need to pay this for a further 3 to 4 months. Therefore, businesses tend to use this as working capital in the meantime. So we look back at our example of the small subcontractor, you can see that they are collecting VAT of £22 and they may not need to pay that for 3 months. In the meantime, they may use that to fund their businesses and to fund projects. Under domestic reverse charge, they will no longer be collecting this VAT, which means they may lose some of their working capital. It's important to consider this change now and prepare for that in advance of the legislation coming into force. At the other end of the spectrum, this legislation could create what are termed repayment traders. This is where due to them no longer collecting and paying VAT on their sales, they're actually due a net reclaim rather than a net payment on their VAT returns. So an example of this would be perhaps a subcontractor who is providing a service which falls within the scope of domestic reverse charge, but all of their purchases are materials, therefore outside the scope of domestic reverse charge. Because VAT is still charged on these items, they can reclaim on their VAT return. Businesses that this applies to can request to move on to monthly VAT returns to speed up the repayments to them, but you do need to contact HMRC if you wish to do this. So the supply chain may take some getting used to, but you should now grasp the importance of understanding your position in the supply chain. Here we've summarised some preparation steps for you. First, review supplies made to and received from other VAT registered contractors to establish if these are subject to reverse charge. Second, understand your customers and suppliers. Do your customers have an onward supply, or are they the final link in the chain? Are your suppliers aware that they need to know how to apply domestic reverse charge to your invoices if they're VAT registered? Consider the changes to your accounting system to deal with this change. And consider the changes to the wording on your invoices where domestic reverse charge applies. And finally, consider the cash flow impact to your business. So to help you distinguish where domestic reverse charge applies, HMRC have actually produced two very useful flowcharts, one for if you're supplying services and one for if you're receiving services. It may be useful for you to have these handy for yourself and your colleagues whilst you get into grips with this new legislation, and we will use these when working through some examples in a few slides' time. So we're now going to move away from the theory and preparation onto implementation and how to process this in Sage 50 Cloud accounts. So let's take a look at the features we are providing you to support you through this legislation change. First of all, we're going to be introducing two new tax codes. By default, these will be T21 and T26. If they're already in use, it will be the next available tax codes. These tax codes will be available in version 26 and above. So we have T21. This will be used for all standard rated transactions where domestic reverse charge applies. We're also introducing T26, and this will be used for all reduced rate transactions where domestic reverse charge applies. These tax codes are to be used on both customer and supplier invoices. And as you'll see in our demonstration shortly, these will take care of the reporting on the VAT return for you. All you need to do is determine whether or not domestic reverse charge applies to that transaction. These tax codes should be set up automatically for you if you are using version 26. However, if you do want to check them for your own peace of mind, they should be configured as you can see on the screen at the moment. In addition to these two new tax codes, we've also added some conditional formatting to our standard invoice layouts. So remember, customer invoices must indicate the VAT value or the VAT rate that would have applied under normal circumstances. This conditional formatting means that when either a T21 or a T26 tax code is used on an invoice, it will automatically update the text on the invoice to indicate it is reverse charge supply, and it will also show the total VAT that would have applied without adding it to the total. So let's take a look at this and bring this to life with some examples. So first, let's take a look at how to record an invoice received from a subcontractor for work they've carried out on our behalf. So the first thing we need to do before processing any transactions is work out whether or not domestic reverse charge applies to this transaction. So we're going to use the HMRC flowchart that you can see on the screen to help us decide first if CIS domestic reverse charge applies. So question 1 is the supply made by an employment business, such as an agency? In this scenario, no, they're a fellow tradesperson. So we can move on to question 2. Is the supply received within the scope of CIS? Again, in this case, they are supplying services subject to the construction industry scheme. Question 3. Is the supply standard rated or reduced rated? For the purpose of the demonstration, we're going to say standard rated. If the transaction had been zero rated or non-vatable, then you would have processed these in the normal manner. Normal VAT rules would apply. Step 4. Have I confirmed with my supplier that I am an end user? In this case, no, we are not the end user in the supply chain. We are going to be providing onward services. So therefore, in this case, domestic reverse charge does apply to this transaction. So we know in that case that this transaction needs to impact boxes 1, 4 and 7 of the VAT return. Next, we need to check the invoice we've received is correct. It's up to us receiving the invoice to ensure that you are receiving correct invoices under this new legislation. If you've been invoiced incorrectly, for example charging VAT when you should have had domestic reverse charge applied, you need to inform the supplier and ask them to reissue the invoice. In this example, the invoice has been completed correctly. The invoice clearly states that domestic reverse charge applies, and it also shows the total VAT value to be passed on without charging this value in the total of the invoice. Now we know we can accept the invoice. Let's take a look at how to process within Sage 50 Cloud accounts and how this affects the VAT return. So first of all, we're going to enter the invoice as a batch invoice, adding T21 to the transaction. With this being a CIS transaction, ensure that you use the CIS nominal codes. As you'll notice there, we're applying T21 to both the labour and the materials on this invoice. So once we've saved that, let's take a look at how that impacts the VAT return. As you can see here, using that T21 has impacted both boxes 1 and 4 with the VAT value, and box 7 now holds the value of the net element of that invoice. If we use the drill down functionality, you'll then be able to see that T21 has also been added to the drill down feature. So now we've seen how to process this for our supplier invoices, let's take a look at how to process this for our customer invoices. Again, our first step is to determine whether or not domestic reverse charge applies to this transaction, and we're going to use the HMRC flowchart to help us decide this. So step 1 is, does the supply fall within the scope of CIS? Again, in this example, we are receiving services subject to the construction industry scheme. Step 2, is the supply standard or reduced rate? Again, in this example, we're going to use standard rated. If the item was zero rated or non-vatable, again, these would just be processed as normal as the normal VAT rules would apply. Step 3, is the customer VAT registered? So in this example, the customer is registered for both VAT and CIS. So that takes us on to question 5. Has your customer provided confirmation that it is an end user? So our customer is not the end user in this case. Again, if they are the end user and you've received written confirmation, the invoice would be processed as normal under the normal VAT rules. So again, we have determined that in this case, domestic reverse charge does apply to this transaction, and this transaction needs to affect box 6 only on your VAT return. So this time we are issuing the invoice, and when we are processing the transaction, we need to make sure that it is sent out correctly. So we need to record on the invoice the amount of VAT that would have been applied under normal circumstances. We also must indicate that the supply is subject to domestic reverse charge. The VAT value must also not be added to the overall total of the invoice. Now, luckily, that's not something you need to worry about because when you process your transaction using a T21, this wording will automatically be added for you, as we'll demonstrate for you in just a moment. So let's observe how to process this within Sage 50 Cloud accounts. First of all, we need to produce the invoice from within the invoicing module. For the purposes of this session, I'm going to do a service invoice. And that just allows me to free type into the boxes. So as you can see here, I've applied a default tax code to my customer of T21 because I know that domestic reverse charge will always apply. So it's automatically pulling through those defaults for me. So again, I'm popping my labour and my materials both on a T21. So we're going to save that. And then we're going to have a look at what that looks like when we print this on one of the standard layouts. So as you can see here, it indicates the reverse charge and it also shows the VAT value that would have been applied under normal circumstances. I'll update the ledgers and then we'll check out the VAT return. And again, within the VAT return, the only box that's impacted is box 6 of the VAT return with the net element of that invoice. So to assist you when determining where domestic reverse charge applies, we have some additional letters available for you to install and use. Both of these letters can be found in our CIS Help Centre or via the link on the bottom of the page. Our subcontractors letter allows you to confirm your VAT and CIS status and also indicate that you require incoming invoices for services that fall into scope to be reverse charged. Our main contractor letter helps you gather that information you require from your main contractors, such as their VAT status, their end user status, and whether or not they're in an intermediary supplier. So once installed, these will sit in either your customer or supplier modules, and these can be customized to suit your business requirements. It's important to note that these letters are only available in Sage 50 Cloud accounts. So let's now summarize the process within Sage 50 Cloud accounts. In terms of implementation, the key is understanding whether or not domestic reverse charge applies to that transaction. Use the HMRC flowcharts to help you understand whether or not domestic reverse charge will apply. But for your supplier invoices, if you're processing a transaction and it is subject to reverse charge, remember by default T21 is used for your standard rated items and T26 for reduced rated items. By using these tax codes, the VAT return will be impacted correctly for you. Remember, if these codes are already in use, the next available codes will be used instead. And for your customer invoices, again, if they are subject to domestic reverse charge, T21 for your standard rated items and T26 for reduced rate. Again, using these tax codes will ensure that the VAT return is impacted correctly, and it will also update the wording on your standard layouts. Standard layouts can easily be amended to add on logos and also layout preferences. So that sums up the new features and how to process in Sage 50 Cloud accounts. So now let's take a look at how this will work in Sage Business Cloud Accounting. For our Sage 50 customers, please do bear with us as these slides won't apply to you. Please bear in mind this is a first look at these new features in Sage Business Cloud Accounting, so they may be subject to small changes prior to implementation. So first, let's take a look at this from a supplier point of view. Supplier records within Sage Business Cloud will be updated to include a reverse charge checkbox. This will be visible on both existing suppliers and when creating a new supplier record. When a supplier has CIS details entered and the VAT number has been added, this checkbox will be automatically selected. Domestic reverse charge will then be applied on all future invoices. However, this can be overridden on an invoice by invoice basis. So let's take a look at how to implement that on a supplier invoice. In this example here, I've selected a CIS and VAT registered supplier, and the invoice date is falling after the 1st of March. As you can see, there is a tick box on the invoice itself that can be deselected if this particular invoice does not fall under domestic reverse charge rules. However, because this is selected, reverse charge VAT has been calculated but not added to the total of the invoice. The banners in the invoice will be updated to indicate the invoice includes reverse charge also. Once this invoice is saved, it will ensure that notional VAT is applied to the VAT return. This means that the VAT value will impact boxes 1 and 4, and box 7 will show the net element of the transaction. So let's now take a look at domestic reverse charge if you need to produce customer invoices. Just like we saw with suppliers, we have the VAT reverse charge checkbox within existing customers and also when creating new customer records. The same rules apply. If the CIS details and the VAT registration number have been entered, then this will be automatically selected. This can be deselected if you know domestic reverse charge will not apply, for example, if you know that you're dealing with the end user. So now if we create an invoice dated after the 1st of March, where the customer has the VAT reverse charge checkbox selected, you can see some changes. First, the wording in the banner indicates reverse charge has been applied. The Use Reverse Charge on this invoice checkbox is selected. Now remember, this can be deselected if domestic reverse charge does not apply to this particular invoice. Finally, the reverse charge is calculated but not added to the overall total of the invoice. This means when you produce your VAT return, the net value will appear in box 6 of the VAT return only. Do bear in mind, as we mentioned earlier, once the tick box is selected to apply domestic reverse charge to the invoice, it will apply to the entire invoice. Within sales, domestic reverse charge can also be applied to quotes and estimates, and this will carry over into the invoice once they are converted. When it comes to printing or emailing these invoices, our layouts have been configured to display the reverse charge value whilst not adding it to the total. They will also contain the correct domestic reverse charge wording for you. Finally, just a couple of other additional considerations when processing domestic reverse charge on Sage Business Cloud Accounting. Users can create recurring invoices with domestic reverse charge applied. It will be important to review any existing recurring invoices after March the 1st just to ensure that the correct VAT is being applied. Finally, domestic reverse charge cannot be applied to quick entries. So that now brings us to the summary for today's session. So first of all, in terms of preparation, business should review the supplies that are made to and from other VAT registered contractors and establish whether these are subject to reverse charge. You'll need to consider changes to your accounting system, so make sure if you're using Sage 50 Cloud accounts that you're using version 26 or above. And also consider the cash flow implications to your business. We are just going to touch on some common questions. We do have a dedicated common questions section purely on CIS, which can be found on our help centre. I would recommend you keep an eye on this over the next few months as it is updated regularly. So the first question we've got there is, what if my invoice contains materials and labour? So if the materials are used as part of the supply of services, then the reverse charge will still apply. And we showed that in our examples today. What if I use VAT cash accounting or flat rate VAT? So transactions subject to reverse charge are actually excluded from these schemes. Also, if you're using flat rate, you may need to consider whether it's still beneficial to remain on a flat rate scheme. Question 3, what if my project spans the 1st of March? And for this, you'll need to consider the tax point. So if your tax point falls prior to the 1st of March, then normal VAT will apply. If the tax point falls after the 1st of March 2021, then domestic reverse charge rules will apply. For further information on those last two questions, I would point you in the direction of the gov.uk site or check for further updates on our help centre. I just want to take the last few moments just to show you some further support and training. We have lots of on-demand webinars and also recordings available on our help centre. We also have free e-learning available on Sage University, and also we have lots of resources available on our Sage Help Centre. So as I mentioned earlier, Sage University is offering free e-learning. The link is on the screen there at the moment, and we do have a dedicated module for CIS domestic reverse charge within there. We also have our Help Centre, which is our central hub for all help and support across all aspects of our software, but we also have a dedicated CIS page within there. So that brings us to the end of our session today on domestic reverse charge for CIS. All that's left for me to say is thank you very much for joining us. Take care and stay safe.